Hello guys, hope you all are doing great. This is going to be a small video on how you could use your footprint, aka order flow charts, to trades, or maybe have a little bit of a confirmation before you actually enter into a trade. You would have heard a lot of times people saying there was initiative buying stroke responsive buying at these levels, or the sellers were aggressive or they were passive. We will go into that. I'm not going to take much of your time into explaining what they actually are in detail, but I'm going to try and tell you so that it is somewhat useful in understanding what this video is all about. So firstly, let's understand one thing. How do the prices, or how does the auction actually move? Okay, so as you guys know, there are two types of orders. One is the limit order and the other one is a market order. Okay, so limit orders, as you would have seen in your market depth, which you see on your broker terminal, wherein you see the left side has the buy orders. These are the resting orders, or the limit orders as they call it. On the right side you have the sell orders, or the limit sell orders, as generally people call them. Now this is called the market depth. Okay, so these are the limit orders. Now the market orders are the ones which are taken by the other side. So for example, when you have a limit buy order, a market sell order is going to take that limit buy order. Okay, so the limit orders in essence do not move the market. Okay, you would have heard of the term called absorption a lot of times when you're dealing with footprint. So for example, I will just give you an example. At this place, okay, when the market auctioned here, there could be a possibility that there was a huge player somewhere in here who absorbed all the selling. Okay, now this guy is called a passive buyer, or a limit buyer if he has placed all his buy orders here, and he's not rushing into buying, or he's not market buying, or he's not lifting the offer, as you call it, by force. He's just sitting there and waiting to fill everything that all the others have to offer to him. So everybody who is selling to him, okay, he's just simply absorbing it. Now, is that enough to take the market back here? Not generally. Okay, so of course, if he's just sucking the liquidity of all the sellers who are just selling over here, but it's not enough. Only that much is not enough for taking it up here. Okay, so what you see is, when something like this happens and he's passively buying, you would see large volumes pop up in below, and but the market isn't moving anywhere. So you know that someone has stepped inside who is in the background just absorbing whatever selling is going on. Now after he's done that, he needs to move this whole auction from here to somewhere away from his buying price, so that he can get something out of this move, something out of this passive buying. So how does he do that? For that, he has to move the markets higher. And how does he do that? He starts buying market orders. So you can move an auction up only if you buy market. Okay, that is called aggressive buying. So he cannot fill up his tank right here by market buying. He can, but he cannot do it so diligently or hiding behind the scenes. So once he's filled in here, he knows there will be a lot of sell orders over here. He just keeps absorbing them, and then he puts in his market orders. And remember, generally the big players would never put in huge market orders. Okay, it's only after he's absorbed is he going to put in aggressive buy orders, and they will not be huge. They will be in stages. So he will go in stages. For example, he puts in some orders here, goes in. We'll see that all that in the footprint charts when we go inside deeper. And because the market would move only because of one side being aggressive, so one side market buying these orders, only then does the market move up. So on the other side, it is not only one player that is involved in the markets. It can be many factors involved. There can be many factors involved. So or what you could have is another player sitting here doing the exact same thing what this guy was doing, okay? And he might come the same day, the next day. So there's where things get complicated, and you have to be involved, and with time, with screen time, with other important references, you would get to know how to use this, okay? So without further ado, let's get deep into some auction that happened yesterday and explain what I'm trying to tell you. Okay, so this is the chart of 13th May, that is Friday. Okay, now let's start with the open. Okay, this is the first time that the market came here. Because of the price action, we knew that there was a gap that was unfilled, and this could act as resistance the first time. So this was your trade plan before entering into the trade. So you wanted to enter short. Now let's see how could we have taken the short. What should our entry have been? Where should we have entered? And the risk we could have taken. So I have changed to the cluster chart, and let's go and deep dive into what was actually happening inside the candles. Okay, so now just so that you know, the right side on this footprint chart are the total volumes, and the left side is delta. Okay, so the market opens, we have this area and the zone marked. Okay, I just marked it from my previous, whatever tools you use price action, volume profile, VWAP, whatever. So we marked this zone because we saw that there was a gap that was unfilled. It could act as a resistance. We just use basic price action theory, and we just thought that this gap would offer a resistance the first time the market touches this place. So one thing we have to remember is we just have to take a trade. What happens is not in our hands. We just have to manage our risk. So this was the plan entering into the day. The market opens, and we are monitoring the footprint chart. The first 15-minute candle. Okay, we know, even if you don't have the footprint on, you know that there is some aggressive buying, as we just talked about, because of the way the first candle formed. It just moved right from 15, approximately 9:30 to 16:30, 100.15-minute move. So now when we look into the footprint chart, what we see here is there is a lot of volume cluster that has been formed here. So this is the interaction zone between the buyers and the sellers. Okay, now what is really distinct about this place is, in this cluster below this, there were sellers mostly, if you can see, and above this there were buyers. So these guys, when the market starts moving up, are getting trapped. Although there are not many of them, but they start getting trapped. The market moves up away from this cluster and goes up. Now we just keep this place in mind. Okay, why? Because this is the place where there is a maximum interaction between the buyers and the sellers. Okay, now it enters into a zone. Okay, it goes up, and there you see, this is what you want to see. You have your zones marked, and you see some activity going on. You see some interaction going on. It's not an easy ride for the buyers. Okay, so you see there is something that is holding this place up. How do you know that? Look at the volume clusters that start forming here, and the price isn't moving anywhere. For all the buying, you look at this, there is so much of buying happening here. The delta is only positive. There is not even one red here. All this buying is in no vein. Okay, it's absolutely of no use. It just goes there and comes back down. Okay, so this zone is holding what we thought it would. Now the aggressive traders would want to just initiate a short according to the plan, so that they get a good stop loss. But some of them, like I, would have liked to wait. I don't know, because it's just the first. It's the first 30 minutes. I don't know where it will go. It is obviously going to hold the first time it comes here. This is a resistance zone. What if the candle? What if it went? What I'm trying to say is, what if it held here? It came back here. Let me draw this again. Okay, it came back here to this cluster. Okay, comes back here and goes back up, and this time breaks it. So you get what I'm trying to tell you. So I am not sure that this is going to hold. So sorry for that. Okay, so where do I actually take a trade now? What do I also know? This is the place that I see there was a resistance that was active. I also know today in the morning, this is the zone where the buyers got the better of the sellers the first time. What happens when this happens? This rejection happens, it goes below this area. Okay, so this is the place where there's interaction between the buyers and the sellers. The sellers wanted to take the price down, they couldn't. The buyers succeeded, but just within 15 minutes they have been successful in getting it down. So these sellers who are trying here might get in again. Now I'm interested. So as soon as it goes below, I would like to get into a short position here. Okay, so I know it's late. People would think that it is late, but this is a confirmation of what I was thinking all along. So what I would do is, I would initiate a short, and I know somewhere here, if these guys can't hold it up, okay, there's no point. This is my last resort. After this, I need to get out of my short position. And where do I put my stop loss, or my target rather? I go into the candles. Okay, I see where my next resistance is likely to come up. So you see this area. Okay, this area somewhere here. I know there was a cluster here, and the next day market, the previous day, the markets had trouble or took a little bit of support here. So this is an area where I could have my potential targets. Okay, somewhere here. Okay, so obviously I will not like to stay till this late. So how do I draw my take target? Would be somewhere before that. Okay, so this is my target area. Okay, now it's a different thing that the market does go in our favor. We take our targets. Now let's go further and see. Now we know why are we getting out in these zones, because we know that there is going to be another interaction between the buyers and the sellers, and the buyers are likely to step in these areas. So do we actually see that? Okay, when this happens, so remember guys, you're not able to see this. This is real market. Okay, so when we come in here, let's take out this short and long. So when we come in here, okay, we do start seeing some interaction. You see the volume pick up here. Okay, in these areas, it did in these areas as well. Okay, so you know, if the market does cross this area, you can initiate a long. So exactly what we did in the previous trade that we took, and there were sellers here. Okay, so the delta here is not as significant in these areas. There was an interaction between the buyers and the sellers, and the delta isn't as significant. Over here you see only sellers active, and it goes and it fails, and these sellers are not doing a good job, is what I come to know. So although we covered our trades, so is there a possibility of initiating a long trade? Well, firstly, you do not, when you enter into a trade, you do not take an opposite trade immediately if you have had a successful trade, or even otherwise. But just for observing, you can just simply observe and learn how these footprint charts work. So you see a lot of interaction, a lot of volume stuffed into this area, a lot of selling that happened. Obviously, you broken the low of the day and the selling that has happened, and immediately you see it's met with aggressive buying in this area in the next candle. And as we said, as soon as this area breaks, you have a valid long entry, okay? And the stop loss becomes obviously this, because these sellers, we would like to see if these guys, like in the previous case, are not done yet. But we know if this moves further, these guys are going to, square off, or they're going to puke. And similarly, it goes on and we get our move up. Now, the next valid, you can see these clusters and you can observe what I have been saying all along in the video. Now the next cluster that becomes is again our zone, okay? The high of the day, where the first time the selling came from. Now this is, remember guys, this is second time in the same zone that we are approaching. So the support becomes, or the resistance rather, becomes a little weaker. Now what happens again? Again, see, there is interaction. The volumes aren't much. In the next one, you see the volumes are really high. It is higher than anything we had from 945. And what do we see? Again, a lot of buying in this area, okay? So these buyers, obviously there will be stop losses at this point. Now after this is broken, you know these guys are, mostly they're the stops that are getting triggered, okay? Now what you want to see is, it's generally not a good idea to enter into a trade immediately after this, okay? So what you want to see is the previous place, this was the zone, okay? Now when it goes to test this zone, which is the, let me take this whole thing out, this zone, where it should not, it should hold this zone, okay? Now it does hold it, it goes back up another 30-40 points, and it fails again. Now what you see here is it holds this volume cluster and goes back again. So when it does this, I would be tempted to take a trade because it's holding this, and I would certainly look for these guys getting tested again, okay? So why am I saying this place and not this place? Because when you are in here, you see a mixed activity of buying and selling, okay? When you are here, you see only buying, and the candle or the auction moves lower. When I come here, I see only selling, okay? Prominently selling, and they haven't been successful, okay? So, and there is a lot of, again, this is good volumes, not as much as this, but these are good volumes, and these sellers couldn't do a good job of taking it lower, okay? And again, I know these guys, whoever are in here, are going to, now when it starts going up, okay, so you're seeing again clusters forming. So you know that this area, which is the resistance in the morning, is acting. There's a lot of interaction between the buyers and the sellers again happening over here, okay? So these two candles are prominently sellers. So if you even want to look deeper, you can see the delta here is minus 1.2. So you see that this is, let's take all this out as for now, okay? So you see the delta is the highest in the previous few candles over here, and also you have to remember that this is a trick that a lot of the big money uses to flush out people and move right back in the direction of the actual trend. So over here we were expecting when it broke the day's high, this is the retest. So the retest took a little bit longer than we expected, and as soon as we see a lot of selling here, you see the delta, the selling isn't able to hold, and these guys, since the maximum volume is here and even over here, we can expect there were a lot of sellers here. You can even see the delta here. These guys just couldn't hold it and get the market auctioning down. So this is where, as I said, I would initiate a long trade. Okay, now where could it go? Well, obviously, like we said before, I would want them to test this area and maybe this high. Okay, that is our first target. So even though it looks really small, these are 70-80 points. Okay, the stop loss could be again just, this is a very good trade. The stop loss could be just here, because if this breaks, we know that these sellers will get active and the entire theory or the analysis that we just did is invalidated. So we don't need to have a big stop loss in here. This is where footprint really comes in handy. Okay, so we test the day's high, we take it out here, and this where there is a large volume cluster, and again there is an interaction here. Now this is where I would, even if I'm in the position, I'm ready to come out. Okay, I just do not want to stay in this trade anymore. I've got what I wanted. Why? Because you see there is again a big positive surge. So this could again be some stops getting triggered. Now I wanted to see this not having this kind of interaction again. I do not want to see a cluster forming again. If this is a breakup, this is the third or the fourth time the day's high is being attempted to be broken, and every time it is attempting to break, there is a cluster forming. I do not want that. Remember what we just discussed. I do not want passive sellers coming in here. I want aggressive buyers coming in here. I want it to move fast. I wanted something like this. Okay, what happens here? Okay, this happens. You see exactly what I was trying to tell you. This is the buy. There's a lot of buying happening here. You can see over here the delta. Now what this candle is telling me is, like what we discussed, there was a passive seller absorbing all throughout the day. Okay, and he's absorbed here, he's absorbed here, he's absorbed here, he's absorbed here. And how do I know that there's a seller? Because there are clusters forming. And remember what we talked about, the market will not move by a passive seller. He will have to get aggressive at some points in time. At some point in time, and at that point when he gets aggressive, he's not going to pump in huge market orders at once, market sell orders. Look what he does. Okay, you see the selling. This is called aggressive selling. Okay, now this is called aggressive selling. What I'm trying to tell you, this is called aggressive selling in here. Let's delete this one. Okay, sorry. Let's delete this. Okay, so this is what I call aggressive selling. Okay, these are small orders. They just keep getting triggered one after. So someone is got a lot of. I don't think retail is selling aggressively here. They don't know what is happening. Everybody is expecting it to break and fill the gap. Look at this. Everybody is expecting it to fill the gap and come to 160s to 200s. But what is not happening is it's not moving up. Okay, and this is not retail selling. Okay, large orders just getting triggered all at once, and this is aggressive selling. Okay, this is what I was talking about. Market orders just taking the market down. So now what we want to see, now again, as we discussed earlier, this is a trick that the big money uses to flush out the longs. But you see, this is the third time they're doing the same thing all over again. So this is too much of flushing down. This should ring your alarm bells. Okay, now do we initiate a short here? No, we need confirmation. As we said, these guys just could be flushing everybody out and take the market high up again. Now for the market to auction higher, what should we expect? These sellers should not be able to defend this. Okay, where does the market go in the next candle? It goes up to the volume cluster and the place exactly from where the aggressive selling started, and it is unsuccessful. this is a confirmation that now I can initiate a short. Okay, so when the market goes down, you see this area, this is all buying. Buyers were trying again, thinking that it is going to fill the gap. It doesn't. And when this fails, I will look to initiate a short. So even if I enter here, okay, when this is failing, I enter somewhere here. Okay, let's take a shot. You would never too late, never be too early. Wait for a confirmation. You will get better trades. And if what we have thought all this while, if it is going to work, and there is an aggressive seller, remember this guy is a big player. He's absorbed a lot over there. If it fails, it's fine, but we know if this move works, it's going to give us what we want. Okay, so let's see. Even if we enter here, okay, our stop is going to be, of course, this huge long, or the stop loss that got triggered. We're assuming this guy has absorbed everything. This is a stop. Okay, so I think it is a 40-point stop. And where do we want our targets to be? Okay, let's take everything out. So you can go in and have your targets placed at important levels taken out from the footprint. Over here, I'm just not going that deep. I'm just wanting you, I'm just taking the targets from the levels that are price action levels, so that you can, associate it with better. So if you see, this is the last swing low that was tested and the market went from here. These were also the levels, but they were tested too many times. So we've taken a trade here. So we would want our targets to be here somewhere. This is the place, as we talked about earlier, where we could get an interaction between the buyers and the sellers. What do I mean? So I can expect the buyers to come into this place. Remember, we don't know what happens next. Okay, we're just taking a trade. And now let's see if we can get a good just above that place. So it's a good risk reward trade. Okay, now we expand. Okay, and there is no harm in waiting throughout the day for trades like this. Okay, now this is where we've taken a trade. Now what do we want to see? Okay, the good part about footprint is, if you're wrong, you get to know quite early. Okay, and you can either take out your position in break even, or whatever your plan is. If your plan is to wait, notwithstanding whatever is happening in the market, and that is how you trade, you remain in the trade. Let stop loss is there just to be hit. Yes, it happens, and we cannot be right all the time. So we are here to give our stop loss away. Now, what do we want to see? We want to see something like this happening. Okay, we don't want to see, because he's done all the passive selling here. We want the move to move the market to auction in this fashion. Okay, if it is halting at levels like this, we might reconsider, or we might come in taking part of a position out, scaling out as you call it. It depends on you. So we need to see an auction. Now the next candle where we break, we see some aggressive selling, and this is in good size. Now the first thing we don't want to see, remember, we don't see this candle. This is what we're saying. The first thing when we are in a trade and we expect selling, what we don't want to see after what has happened? We don't want these sellers to go into the water. What do I mean by that? The auction should not start moving in this direction again. Okay, we have a stop losses in play, and certainly not above this. Okay, this is what we don't want to see. Okay, because sometimes the market does take longer. It goes up again, and the passive seller might absorb again. We can wait. But this is just being preemptive. This is just, you can just observe the markets. You can just observe the footprint charts as to what is actually happening. Okay, so we don't want these guys. Okay, we don't want, sorry for that, these guys. Then we don't want these guys, these sellers, to be in the water. Okay, if they're in the water, they're going to move out of the positions probably, and then we might auction higher, and we have a gap above us to be filled. Okay, anyway, so what we see, it opens here, and this is what we wanted to see. Okay, now just aggressive sell orders. Now these are aggressive sell orders which make sense. Okay, this is by someone who has been absorbing all along the whole day over here. Okay, now this is the zone we drew where we expected someone to step in and look exact. It will not be exact, but there is one big order. So this happens when there is someone on the other side. So someone did step in, either there is a stop loss order or there's a passive buy order that is happening. Now why do we need to pay attention to this? Because this is a reference that you can hold on and carry on for the next day. Okay, so you might see this level having some sort of importance the next day when you come up. Okay, or the next time when this price comes in, because obviously there is a buyer here. We don't know whether there was it was a stop loss buy order. We don't know anything, but because this is difficult to say. What we know is this was a level that was a previous level where there was interaction between the buyers and the sellers previously. So someone again has come in here. Okay, so this is a level which I would mark and keep it for my future reference. And by the way, our targets have met here. So we didn't know this is going to happen. We took our target here because we knew there was someone who would step in here, and we don't want to be waiting that long. So what happens there is just, I mean, the way to look at it is, yes, you could have achieved bigger targets. Well, you could have taken partial targets. It again depends on how you manage your risk and whether you're ready to take that, ready to invest that time and wait longer. Okay, so there's always a reward when there is more risk. Okay, and what happened is obviously the markets kept going down after that, which we can't discuss. So this is how it works, and you can keep all these. See, where is the next interaction happening between the buyers and the sellers? This is the place. So you can mark these zones and keep it for your future. So 935. I'm just saying these are not exact. Of course, these are exact levels, but these are zones where someone is likely to step in. So how do you use them? So if you've taken a long from somewhere below, you know that someone will come in here and defend it or something like that. So you always place a target below this place, and it helps. So if you are not getting a favorable risk reward, you don't get into the long, and so on. So that is it for now, guys. Hope you had hope this all what I shared was of some help to you. So until next time, see you guys.